let's bring in our guest host for the next hour, Mario Singh, Director, Training and Education at fxprimus.com. Mario, thanks for coming in. So so our viewers are fully aware then, the IFO index measuring business sentiment, the sentiment amongst businesses in Germany, the current conditions as we were hearing there from Patricia, better than expected, and crucially the expectations element of this, so how they feel about the future, also better than expected. How do you feel about whether Germany can sustain this strong performance we've seen so far this year?
Hi, and I think, well, the news that came out did surprise to the upside. Everyone was looking at that. It just came out, those news. What is interesting to note is that one of my major concerns at this point is whether how sustainable these figures are. We've had bad results coming up from the US yesterday in terms of their existing home sales. So really no one has a real good reason to hold on to dollars. So a lot of capital flows have been moving towards Europe, I think also because of this particular news that came out from the IFO. And Germany in particularly being the largest economy in Europe, it was a good result, I would say, at least for Europe. I'm just cautious at this point in terms of its sustainability because what has been coming out of US hasn't been good, at least for the last 1 week.
Okay, stay with us then, Mario. Let's get to Jürgen Pfister, who's Chief Economist at Bayer's Landesbank and joins us now from Munich. Jürgen, thanks very much for coming to talk to us. So how sustainable do you think the recovery is in Germany? If you looked at some of the data we got out yesterday on GDP, some of the detail, it seemed that some analysts were saying, oh, this shows us it's just an export story, therefore it's at risk. Others were saying, actually, the domestic story in Germany is pretty strong. That means it could be more sustainable.
Well, it's certainly true that it's not only exports. We are also seeing a quite sharp rebound in business investment, although the level is still very depressed. And private consumption has started to grow in the second quarter for the first time in more than 3 quarters. So there are some indications of a self-sustained recovery. But of course, we have to see that other European euro area economies are still fairly weak, also indicated by the huge discrepancy in growth between the German economy in the second quarter and euro area growth in the second quarter. So I think we are still a bit away from a self-sustained recovery in the euro area as a whole.
And how worried are you then about a double dip, Jürgen? Do you think that if we start to see, well, the data from the US has been disappointing over recent weeks, and we're hearing increasing talk of a moderation in growth rate out of China, so how much of a risk of double dip for Europe are you factoring in?
No, I think double dip is a very unlikely outcome for the next, say, 6 to 12 months. But what we definitely will see, I would say, is a significant slowdown of global growth, especially stemming from the US, but also partly from emerging markets. And this, of course, also will have some impact on euro area growth, as the important stimulus factors from rebuilding of inventories, but also from the fiscal stimulus programs, will lose their importance. And therefore, I think somewhat slower growth is ahead of us.
Dr. Pfister, thank you very much. Dr. Jürgen Pfister, Chief Economist at Bayern Landesbank.